JFD, just fair and direct.
Okay, hello guys. Good morning, everyone. I think I've something was wrong with my microphone. So yeah, guys, I'll start again. Welcome everyone. I do apologize for this kind of quiet moment here initially, but yeah, something was wrong here with my microphone. But hopefully now you can hear me okay. Basically, I'll start from the beginning. So, welcome to this JFD Traders Espresso with me, Darius Anucauskas. As always, guys, this morning we'll have a look at some of the instruments, some of the instruments that we looked at yesterday, some new ones. But yeah, as always, before we jump in, like I said, just a quick reminder of our risk disclaimer. So, yep, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. So, guys, as I said, just a few seconds for you to read the rest, and we can continue. Okay, so now then, jumping into the oh, actually, by the way, as well, before we continue, quick up mentioning of our JD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming video. There we go, lagging a little bit. That's my computer, guys, not the website. Basically, a little bit too not enough power probably for that one. But basically, with our JFD website, you can check us out here, especially the research page, which I believe you can find useful. Now, jumping into the charts, and yeah, the first one is always Nikkei 225. The index drifted to the downside here a little bit, not much, but and kind of managed to kind of remain fractionally in the red, I would say. So, nevertheless, the index remains above the 21-day EMA, the one that I kept talking about. And yep, so far, guys, the idea is kind of still working out, I would say partially, because what I was saying previously, that if the 21-day EMA together with this upside line here taken from the low, the 22nd of December, continues to hold, then yes, we could see another a nice push back to the upside again. So keep that in mind. But if this upside line gets broken and the price starts falling below the 28,980 zone here, then yes, I will go for a bit of a larger correction to the downside. But you know the situation. If you've watched my videos from the beginning of this week, then yes, like I said, the same kind of game plan remains. Now, Hong Kong's Hang Seng Index, and yep, this downside line taken from the high of the 22nd of February is doing its job and is providing good support for now, I would say. Although yes, we saw it a few times here, the kind of the index dropping back below the 21-day EMA. However, looking at this picture, you can see that basically so far, I mean, it's just kind of oscillating around around this this 21-day EMA. And either way, guys, if you want to go for some higher levels, well, that's why I have this highlighted area right here near the 29,550 territory, which I need to see a break off in order to kind of go for some higher levels. But at the moment, I'm gonna, let's say, I'll remain cautiously bullish on this one. As I said, I'll wait for that confirmation break. For the downside, I need to see a drop below the 28,326 territory right here, marked by the low of the 9th of March. So, yep, then lower levels could be met. This because at the same time we would be back below this downside line. The German index DAX, and here you can see that yesterday the index closed in the red here slightly, but it drifted below this this area right here. Let me just zoom in here a little bit. Probably it'll be a little bit easier to see. So what I was saying yesterday, that if we get a drop below the 15,210 zone, this increases the chances for a further move lower, where we could maybe then target the 15,111 territory, or even the 15,000 mark itself. But if we take a look at the cash index right now, we'll see that the price is back above this hurdle. So basically, it drifted lower, it continued to move south, yes, it closed below this area, but the positivity that kicked in late during the US session kind of managed to push the futures market back to the upside, and like I said, yep, now the German index is trading back above this 15,210 zone. Let's put it this way, if it continues to balance above this, then yes, there is a chance for this one to move to the all-time high again near the 15,112 zone. But if it suddenly reverses back down and falls below the 15,210 territory right here, then yes, we could go for a bit of a larger correction here to the downside. So be very careful with this one. At the moment, it's a little bit unclear what the indices want to do, because I mean, of course, some of them have been hitting all-time highs, just but at some point they will have to correct lower. But will it be anytime soon? Again, that's a little bit of a tricky one here. We need to be very careful, and that's why, guys, I mean, let's say in these scenarios, like I've mentioned yesterday, like for example, a drop below the 15,210 zone, yes, open the door for lower areas, but at this point, what you need to do here straight away is put your your stop loss on break even, because again, we're kind of really going against the trend here, and yes, then just in order to kind of protect yourself, just in case this suddenly reverses, as it did already, so on the cash index. So that's why we always like when we're, let's say, doing something like this, then we always need to have our stop loss in place, guys, and we need to place it accordingly. Yes, it sometimes is frustrating that maybe you were right initially, but then it kind of stopped you out. But yeah, that's kind of part of the game, guys. Of course, if you're comfortable with a huge stop loss, then yeah, no, feel free, whatever you're comfortable with. But to be honest, I mean, we'd rather be on the safe side, so that's why we'll try to find a new, maybe possible kind of entry, let's say for the downside, but later on we need that confirmation signal first. But for me, like I said, maybe another drop below the 15,210 zone could do the trick for more sellers here, and but then again, like I said, I'll keep the stop loss very, very close. However, for the upside, to get a little bit more comfortable with the upside, a push above this 15,312 territory right here, if we get a nice push above this will confirm a forthcoming higher high, and yep, could send the index further north into uncharted territory, of course, and then, well, the sky's the limit for this one. DXY, very quickly on this. So the index is still trading below this downside line. Let me just adjust this very quickly. There we go. Below this downside line taken from the high of the 25th of September. It's also trading below this hurdle here. This is what I said to you guys yesterday when I was covering this one. I said that we might see a bit of a corrective move here, maybe back to the upside. We did, and if this 92.50 territory holds, then yep, another slide could be possible. And this is so far what we are getting. The only issue here is the 21-day EMA for the bears. But if we manage to overcome this, then yes, of course, we'll go for some lower areas. But if not, then I'm still kind of I'll remain, let's say, cautiously bearish on this one, because there still could be a chance for this one to kind of climb back up here. Now, let me just get rid of this upside line, no longer needed, to be honest. And for the upside, what I would like to see now here is a push above this hurdle, above this 92.80 territory. At the same time, the price would be placed above the 200-day EMA, and maybe more buyers could join in here. So keep your eyes on this one. For now, we're below the downside line, still slightly above the 21-day EMA, but if it drops below it, then yes, lower levels could be met. Jumping into gold, and gold is pushing higher, and pushing above this 1739 territory right here. Again, and of course this creates this slightly more positive atmosphere. But now, to be honest, given the current trading activity, probably a push above the high of the 6th of April here, Tuesday's high, might be a little bit more interesting here, because again, or might be a little bit safer, I would say. So this level is near the 1745 territory, roughly around here. We're approaching that level already and testing that level already. Can we push above it? Well, I mean, let's wait and see. But basically, when we have a market like this, when it's kind of a little bit on the calm side, that's probably the safer option. Well, to be honest, it's always the safer option. So you can see that yes, the 21-day EMA continues to provide support. That's good for the buyers, but let's see if we can actually overcome this 1745 level. If we can, then yes, I'll aim for some higher levels. I'll aim for that 1760 territory or even above that. But if this 1745 territory continues to provide resistance, yeah, certainly this could be a bit of a worrying signal for the bulls. But for me, probably I would prefer to maybe at least see a drop below the 21-day EMA and then see a daily candle staying below it in order to go for a bit of a larger correction to the downside. Now jumping into WTI oil. So I haven't looked at this one for quite a while, but basically we're still trading below this upside support line taken from the low, the 20th of April of last year. Although this could be seen as a negative, as you can see, the price is somehow still kind of oscillating around this 59.30 territory, and it's still above this key support zone, the one that I mentioned previously, this 57.30 mark, roughly around here, which is the lowest point of March. And yeah, I mean, in order to get a little bit more excited with the downside, we need to see a drop below this, and we would like to see also a daily candle staying below it, because again, what I don't want to see here is just a false breakout. For the upside, of course, for the upside, I would like to maybe wait for a push above this area here, this 62 territory, in order to get a little bit more excited with the upside, because at the same time, the commodity would be placed back above this upside line, and yep, maybe more buyers could see this as a good opportunity to step in. So keep that in mind. Bitcoin Cash. Bitcoin Cash, it's right. Okay, so it after, let's say we got this break, I talked about this 602 territory. We got a break above it. We pushed further north. We cleared the highest point of January near the 631.70 zone here, and then we continued to rally. So we managed to reach the area around here. Let me just adjust this very quickly. There we go. This 690, let's round it up here a little bit, 694 mark, and then we drifted back down. However, as you can see, this 602, or let's even also round it up here, maybe this 600 level did provide good support, or it's still providing good support, and yep, something like this then could be possible. Now, even if we drop below the 200, the 600 level here, there is still a chance for the bulls to step in somewhere near this upside line taken from the low, the 24th of March, which also could provide support together with the 21-day EMA, and then yes, another push higher could be possible. So something like that could be this scenario could happen if we see a drop below the 600 level. There's still kind of a chance for the bulls to step in, but if this upside line gets broken and we see the rate falling, the rate, because we're talking about BCH here against the USD, if it falls below the 522 rate here, then yes, we could see a bit of a decline here, and yep, we could see maybe a move towards some of these levels here, the low of March, the lowest point of March here, and let me just quickly put that on the map here. Yep, the lowest point of March is roughly around the 443 territory, and the lowest point of February here, which also could be tested, or actually that's not the lowest point of February, no, that's the low of the February 28th, there we go, and that's near the 432 level. So basically you got the picture, you got the idea. Long story short, what we need here is, first of all, to keep an eye on that 600 level. If it continues to provide support, then yes, a push higher could be possible. But if it fails, then there is still a last chance for the bulls to step in somewhere around here, and then drive it higher. Litecoin. So also kind of a little bit similar story to Bitcoin Cash. So the momentum is still to the upside, of course, and we're still trading above this upside line here, taken from the low of the 11th of December. But as you can see, after kind of failing to hit the highest point, the current highest point of this year, near the 246.5 level here, we drifted back down, and however, we found support near this area, near this 212.38 zone. So what's going to happen here right now? Well, I mean, the moment, I would say the same story as with BCH USD. We need to keep an eye on this hurdle, this support zone, which somehow currently is doing its job. But even if we drop below this, yes, this could lead to a bit of a larger correction here to the downside. However, the last chance for the bulls to step in here could be near this upside line. But if this upside line gets broken and the rate falls below this area, the 191.76 zone, then yes, of course, we could go for a further decline here towards the 168.85 level, and then we'll take it from there. Jumping into a few pairs very quickly. So, quick update on AUD/USD. I talked about this, guys, and to be honest, the same kind of game plan remains. Yes, we are still within this falling channel pattern, but at the same time, we're struggling with this support zone near the 0.7557, and we need to see a clear break below this area in order to continue aiming lower. But at the same time, again, like I said, we'll continue on watching the developments around the dollar index, because if that starts sliding heavily, then maybe we'll see a nice break of this of the upper side of the falling channel, and if so, then yep, higher levels could be met, guys. ADJPY, so also a quick update this week. I talked about this one, and I said that what's needed here for the downside, not only a break of this upside line, and yes, a drop below the 21-day EMA could strengthen that the downside scenario, but preferably, I've mentioned this, like I said in the beginning of this week, preferably I would like to see a drop below this 83.43 territory right here, and then yes, we could go for further declines here. For now, where you can see that this hurdle is kind of providing good support. Let's see if it can continue providing support. If it cannot, and if, for example, right now, if the pair will struggle to get back above the 21-day EMA and then reverses back down and drops below this area, below this 83.43 zone, then yes, of course, this opens the door towards lower areas, lower levels. For the upside, it's pretty straightforward. We need to see a push above the this barrier right here, the 84.49 zone, somewhere around here, and then yes, higher levels could be met. A quick update on USD CAD. I'm not going to spend too much time on this one, but basically the idea that I've mentioned here in the beginning of this week is working out. So for the upside, or should I say, let me start from the beginning. After rebounding from this downside line, the pair drifted back up above the 21-day EMA, climbed above the 1.2590 territory right here, and now seems to be willing to drive higher here. But of course, we'll keep an eye on oil. If that starts rising, then maybe we'll see USD CAD reversing back to the downside. But if oil suddenly continues, or not suddenly, but if oil continues with the decline, then even with the weaker DXY, still USD CAD here could push north. So keep that in mind, guys. For now, we're trading it still above this 1.2590 territory, which and if we continue to trade above that area, then yes, of course, kind of higher levels could be met here. But my next target is only near the 1.2738 territory here, and then I'll take it from there. A quick update on USD JPY, drifting lower. So yep, this 109.85 level did provide good resistance. So yep, now we're seeing this further move south. So yep, again, although I have the arrow here all the way towards this level, this is my ideal scenario. But initially, of course, I'm aiming for this 109.23 territory, 23.25 approximately around here, near the 21-day EMA. GBP CHF. This is where it's becoming interesting here on GBP CHF, and this is what I talked about yesterday and the day before yesterday, that after dropping below this area, this 1.2966, yes, the pair kind of opened the door for itself for a further move lower, and I said that if we see also the daily candle remaining below the 21-day EMA here, then yes, we could go for a larger correction to the downside. And as you can see, this is what happened. So we managed to test this upside line. We're currently stalling near it. Can we remain above it? Now that's another issue here. If we can, then yes, there is a chance still for the bulls to step in, but to be honest, my preferred level, if yesterday I talked about the 1.2966 territory, now probably I'll drop it a little bit here towards the 1.2917 area, marked by the low of the 30th of March here. And yep, if we get a push above that, then I'll go for slightly higher levels here, guys. Now for the downside, to be a little bit more on the safe side, if we drop back below this upside line, keep your eyes on yesterday's low near the 1.2744 level here. A nice good drop below it. Yes, we'll confirm a forthcoming lower low, and yeah, further declines are possible. GBP JPY, very quickly on this, guys, before I run out of time. So yeah, also drifted lower, tested this hurdle, the one that I talked about, the 150.79. So everything's kind of working out nicely. Now, still, I'm kind of leaning towards a possible test of this upside line here, taken from the low of the 21st of December. If that provides good support, then yes, we could see a rebound. But if it doesn't, then yep, further declines are possible. But at the moment, I'm leaning a little bit more to the downside. only if the pair continues to trade below the 21-day EMA right here. Euro GBP, so good push higher. Look at this one, and yep, it continues to kind of rally. Right now we're seeing a bit of a corrective mode here. Let's see if we can stay above this area, above the 0.8628 zone. Now, yesterday we managed to remain above that hurdle, so in a way kind of positive news for the buyers. Now what could happen here, let me just adjust this a little bit very quickly. So now what could happen, maybe we could drift a little bit back down, but if the 21-day EMA does provide good support, yes, a push back higher here to the upside here could be possible. So keep that scenario in your head. And EURUSD, so still battling with this 1.1881 zone. So you can see yesterday we had a nice pop here, but we've drifted back below it. Now, of course, this kind of raised a bit of concerns here, and that it failed to stay above the 1.1881 territory. Well, of course, keep your eyes today, guys, on the ECB monetary policy statement. So, yep, that's something to keep in mind, and of course, on the U.S. Initial and continuing jobless claims, that could drive this pair here a little bit. So, for now, what I'm going to consider is a possible scenario like this, where we could see maybe a bit of a retracement, maybe even back to this 200-day EMA, this near the 1.1834 level. If all this provides good support, yep, a nice good push higher here again could be possible. However, if it drops below the 200-day EMA and then falls below the 1.18 territory right here, this is where I'll start looking at the downside again. So guys, that's it for this session. I hope you found it useful. Really appreciate your views, your likes, guys, your participation. So if you want to catch my video later on, my trader's tea time is always 12:30 GMT time. We'll have a look at some of the US indices. But yeah, guys, we'll take it from there. So I hope you have a fantastic trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.